Hey, what's up, guys? It's Untitled here from DesireToTRADE.com. Now, over the past few weeks, I've done a couple of videos about psychology and the mindset and just execution and trading. But now I want to go into a little bit more technical stuff. So, I've written a post on my blog, DesireToTRADE.com, recently, and it's about the three types of trade that you must know in trading. Whatever your strategy is, whatever you trade, whatever time frame you have, you always have three types of trades. And it's important to know what you trade, because depending on what you trade, you're gonna take the trade differently, you're gonna place your stop loss differently, and you're gonna manage the trade differently also. And so I'm gonna guide you through that post I wrote recently. Now the three type of trade you have, it's all in details, but you have the breakout trade, the pullback trade, and the reversal. Those are three trades you have to know, basically. They are the three major one. There's another one also which I won't talk about because it's a little bit more complicated, but those are the three type of trade that you have to know. So the breakout trade, here's an example. It's simply having a move downward and then some sort of resistance line. And at some point, a breakout trade is where it breaks out of the resistance line and goes somewhere above. So what you do is you enter at point 2, right after it passed the resistance line, and then you just ride the move upward, basically. This is how you do it. It's really simple. Now, what's happening here? Because I like to go into detail on what's happening, because all these type of trades are all stories in the end. They're all stories you can read. They're all battles between the buyer and the sellers, and so that's what I want you to understand also. So we've come to that point here. At that point, the seller became more aggressive. They sold the market all the way through here. And at that point, the buyers started to think that this price was too low. So they kept buying to move the price back up. Same thing happened here. We reached the same price. So sellers start selling more aggressively and they took control of the market. Then at that point, again, the buyers kept control. They took control of the market to drive the price up until that point. And at that point, the sellers didn't come back on the market enough to fight the buyers. So the price kept pushing higher. And so once the price kept pushing higher, more people joined the market and more people put positions. The buyers bought more, and there was no one to sell enough to make the market go down, which create the breakout, which is right here. So you had a big move outside of the previous range, basically. This is what happens. It's pretty simple. Now, what you do in that situation usually is you place a stop loss right below the low of the breakout, and then you can put your take profit somewhere above here. You always enter when you're sure that it's going to be a breakout. So you don't want to have a fake out, which is when the price go up and then comes back down. So you want to make sure that you put your entry above enough and with enough evidence that that's going to go higher afterward. Now, second type of trade, the pullback. Pullback happens when the price was in a range, then did some sort of breakout, but came back down to do what we call a pullback and hit the previous support, the previous resistance in that case, which now becomes a support. So what happened is the buyers were really aggressive, they pushed the market higher. Then at some point the seller entered and they became more aggressive. Or it could simply be that the buyer that were buying here started to take profit, which means the price decreased. Then when it reached a certain level, some people bought more, pushing the price higher. And the same thing happened here. Here we had a breakout, meaning there was no seller at that point to push the price lower. This can be because of the news, it can be because of anything basically. But the important thing is that at some point people started to take profit, meaning the price decreased here. But then more people started buying, which is where you enter a pullback trade. If you have enough evidence around that zone here, the previous resistance, which is now support, if you have enough evidence that the price will go up here, you can enter a pullback trade, which means you bid on the price going higher, basically. So that's an example. You put your stop loss always below the low of the candle where you enter usually, or below the most recent low, and then you try to ride the way up. Now let's look at the last trade, which is the reversal trade. Now reversal trade is when the market trades in a range. As you see in this chart, we had a support and a resistance, and the price kept going between those two places. Now, if you look here, you have a big leg up, right? So that means the buyers were really, really aggressive. But at some point, the sellers entered the market more aggressively. They took control of it, and they pushed the price lower. But then at this point, when the price went back down to the support was here, so then people started buying again, more aggressively. It took control. Until it reached this point here. And at this point, since you had a previous resistance, you could decide to short the market, so to sell the market. And this is simply because you know that in the past at that point, some sellers came more aggressively and took control of the market. So that's what you're thinking about that's going to happen again. You kind of bet on that thing. It's not always happening, but sometimes it happens, and here it happened perfectly. So if you had enough evidence to think that the price would go down here, you could put a short trade and ride the market all the way down, probably to the previous support, or at least to part of it if you want. So this is the reversal trade. You always put your stop loss above around here to make sure that the price don't go up and hit your stop loss. And you always enter some candle when you have enough evidence. So that's about what's a reversal trade basically. Now, I've explained this, I think, in details. If you have any question, you can always let me know, and I'll make sure to answer your question. But the thing I really want to leave you with is you really have to take action on this. I try to write articles that are based on action steps, so at the end I always have an action step, meaning I want you to do something with them. I don't want you to just watch these videos and do nothing about them after you watch them. So the cool thing is that you really have to take action. And what I want you to take action on right now is I want you to know exactly what you trade. So look at your trade, look at your strategy. If you don't have a strategy, you might want to let me know, email me, because I'll help you figure this out. But if you have a strategy, figure out what type of trade you're trading. Figure out what exactly you're trading so that you know which type of trade it is. And depending on what market you're trading, if you're trading Forex, you might have some better result with one type. And if you're trading stock, it might be another type. So it's something you have to know. And then based on that, you have to ask yourself: Did you trade? Did you take the trade well? Did you trade that well? Based on the things that are mentioned in this article, that's really what it's all about. If you're trading well, then that's perfect, and that's really what you want to do in the end. You want to improve your trading. So check that out. This article is at DesireToTRADE.com. You'll see it pretty easily. I think it's called three types of trade, two types of trade you must know. So check that out. Read it. I'm pretty sure it's good. I had good comment about it. A couple of views also. And if you have any questions, let me know. I'll be happy to help you with that. One last thing, again, subscribe to the channel. It's on I think the lower right, and it helps me a lot because I want to grow on YouTube, and just enjoy the trading. That's what counts. So, all right, guys, see you pretty soon. Ciao.